Forex risk management. All right, ladies and gentlemen, let's talk about it. What's up, guys? This is Eddie Harvey from EddieLHarvey.com, guys. All right, today we're going to talk about Forex risk management. Okay, what is it? What you should be risking on the trades that you're taking. All right, guys. So look, risk management, guys, is exactly as the name says, is the management of the risk that you're taking on the trades you are entering into in the market. All right, now risk management, guys, low key, in my opinion, risk management is the most important thing you can have when it comes to trading for several reasons, guys. Because number one, guys, when you look at risk management, you have the complete control over it. Okay, that's what makes it so important. You're in control. You can't control the markets, right? You can't control what's gonna happen on a day-to-day basis. You can't control news, none of that stuff, but you can control the risk that you're putting on a trade. Okay, and by being in control of this risk and handling your risk the right way is going to determine how long you're in this game of trading or not. I'll get back to that in a second. The second thing, guys, having a phenomenal strategy, we need that. Being able to have money in the account to trade, we know we need that. Okay, those things go without saying. Okay, but you got to have that risk management, guys, because no matter how good your strategy is, it doesn't matter. You know how much money you have in an account, guys. If you're not controlling your risk and managing your risk on a day-to-day basis, being aware and in tune with what that account is looking like and what you're risking when you're getting out there in the markets, nothing else matters. Okay. Now, I said this determines how long you stay in the game or not. Okay. So when I talk to people on a daily basis and people are telling me, and I ask them, just conversing and see how Forex is going for them. And when I hear people saying, man, I blew my account, or man, I took a couple of big L's, right? Man, I've been out of the game for a minute, losses run people away. See, people start blaming Forex, people start blaming systems, companies, strategies, all of those things. And not 100%, but the one thing you do have the control over is risk. No one told you that in yourself, right? Even if someone did tell you, hey, trade with this certain lot size, and I get it, people do challenges and different things and have people having crazy lots, right? That's out of proportion of what they should be risking, then that leads to problems. But you got to have common sense for yourself and understand that you're risking in your account, okay, is going to determine how long you stay in the game or not, right? Because if you take a couple of big losses, can you bounce back from that? That comes down to you deciding if you're going to risk more than you should be risking, right? Or the other factors that lead to that risk, not using a stop loss, over trading, all of those things all play a part in risk management. And I'm about to get into that right now. So you are in sole control of your risk, guys, and no one else. You can't blame systems, people, company, strategies, because you're the one that's determining what you're going to put in for that lot size, how many pips you're going to risk for that trade. That all comes down to your choice. Even if you're taking copy and paste trades from someone, they give you a rule of thumb of what we're about to talk about, what you should be risking per trade. Most people will tell you, right? A good rule of thumb is a 0.01 lot size for every $100 that you have. Okay, again, a 0.01 lot for every $100. Now, that's 10 cents per pip. And I get people look at that and say, man, they see the big numbers, the big money that people are making with trading, and they might be like, man, 10 cents a pip, that's nothing. But you got to look at it, guys. You got to have the mindset to understand that if you can't manage a $100 account, right, and grow that properly, don't expect to manage $1,000 or $10,000 or $100,000. The same principles apply. If you can't make things happen with that $100 account, don't expect to make it happen with the $10,000 account. You got to get better over time, and you got to have that risk. Hell, if you can't if you can't have proper risk management of 100, you're not going to get to 10,000. Right? Or let's just say you came across some money or you invested. Let's say you started to ramp it up, say, all right, you got some money, you invested 10 grand. You still got to have risk management over it. So now 0.01 lots for every $100. So let's say you have a $1,000 account, right? Here's what you got to look at: what type of trader you are, how many trades you're taking per day, how many positions. All of those things play a part in it. For me personally, I say, hey, one pair, right? One trade, one pair, guys. And that's what I'm focused on, okay? Once I get in that trade, nothing else matters. I'm not entering 2, 3, 4, 5 positions. Now, if my account can handle that, then that's a whole different ballgame. But let's say if I have a $1,000 account, My rule of thumb is I'm risking 3% on that trade that I'm in. So for me, $1,000, 3%. So you're looking at, okay, that's a 0.1, right? Which is $1 per pip. I'm risking 30 pips. That's me. Now you might have somebody to say, hey, I'm gonna risk, 5%. That'll be 50 pips, right? If you're doing a 0.1. If you're only gonna risk 1%, that's 10 pips. It's up to you to determine that, but I'm telling you what I'm doing for myself. So that's the first thing when I determine what I'm going in on a trade with, right? 3% on this trade, and that's it. So now if I lose that 3%, then that's it for the day. I took an L that day. It's all good. Now you might say, hey man, I'm willing to risk 5% of my account for the day. And you can break that up and do it how you want to do it. I could have took that and said, you know what, instead of risking my 3% is what I want to risk for the day. I could have said, okay, I'm gonna risk 1% on 3 separate trades, right? I can stack that way if I'm doing a smaller lot, right? But if on that same account, guys, let's say if you're saying, you know what, you're risking 3% per trade, but then you go enter 3 positions on a trade. Now that's no longer 3% that you're risking. Now you're risking 9% or whatever you choose, right? If you're trying to do 30 pips for each one. So it's up to you to how you want to break it down, because you can enter multiple positions, right? But once you start entering multiple positions, you got to look at that's going to increase your percent risk depending on what it is that you're going for. So there's so many ways to play with it, but you got to understand that if you're saying for the day, I want to risk 3%, and that's all I'm risking for the day, okay? Per trade. If I'm risking 3% per trade. So if I go in and I enter that one trade, for me, I'm only doing one trade. That's 3%. You can go in and say, okay, I'm gonna split this. I'm gonna enter three positions and do 1% on each one. Or you can be someone that says, okay, you might be thinking I'm risking 3% per trade. I'm doing 3%. Now you enter multiple times. Now you went from 3% to 9%. So you have to monitor that. How much are you willing to risk per trade? Then not only do you have to monitor how much you're willing to risk per trade, how much are you willing to risk per day? Okay, so you got per day and you got per trade. I'm doing 3% on that one trade, and that's my same amount of risk for the day. That's it, 3%. You might say again, I'm willing to do 5% for the day. Let's say you take a loss on that trade, you went 3% in, well, you still got 2% left to play with, where you can go back in, and that's what you're willing to risk. Now, the reward on the other side of that, right? Your reward might be 3%, 5%, 7%. So if that's the case, whatever you lost, you can get that back and then some. So we're not going to go on a risk and reward. I did a video yesterday on risk to reward, which led me to do this, talking about risk management. So it's right up there. If you want to check it out, guys, you can go watch the risk to reward video and learn more about risk to reward. Okay. But risk management is everything, guys. You got to have proper risk management if you want to stay in the Forex game long term. Look at the risk that you're putting in on a trade, manage your risk accordingly. Right? I understand brokers are not on your side. Brokers want to see you lose. So with brokers, they allow you to pick these certain leverages, right? They want to take your money. We're in there trading to make our money, but their job is to take the money, right? So you got to look at, if you're doing a leverage, I like 1 to 200. Some people might do a 1 to 500 or whatever, but the bigger the leverage, now you can risk even more. So you want to be careful with that. But you got to understand that, guys, if you're able to maintain your risk, you can be in the Forex world for a very long time. All right. So manage that risk appropriately, guys. Look at what you're risking on each trade and then play that into what you're going to risk for the day. If your risk that you're doing on that trade is the same as what you risk for the day, you take your one trade. And if you lose it, you're done for the day. You live to trade another day. You can switch it up, split it, stack, enter multiple positions, twin trade, whatever you want to do. You have the options to do different things. So there you have it, man. I hope you all got some value from this. I appreciate you all hopping on, guys. Before you go, I got 2 things for you. Number 1, I have a free cheat sheet I want to give to you guys where I talk about the 14 do's and don'ts of Forex trading. Where I talk about 7 things you should be doing and 7 things you should not be doing when you're trading in the foreign exchange market, guys. I have a complete audio that's about almost 40 minutes in length, breaking down each step in more detail. And I give you a bonus 3-step checklist for you to 3 things you should be doing every day when you enter into the market. All right. And the second thing I have, guys, if you're looking to learn to trade Forex, guys, I have a private group for where you can learn more about the platform that I'm a part of, been a part of this platform for 4 years, guys, where we have professional 6, 7, and 8-figure traders that teach you how to trade, right? They're teaching you strategies. We have academies that give you complete education, learning Forex A through Z, and along with multiple strategies, 12 plus strategies that you can learn, guys, to earn in the market space of trading. So if you want to learn more about that and get a sneak peek of what it is, head over to Facebook and go type in Forex value, and the group will come up. You can also just type in fb.tradewithed.com. All right, guys, and for my cheat sheet, if you want to grab it, go to my blog. The link is right below, and you'll be able to pick that up. Guys, I thank you for your time. I hope you all got some value from this video. I will talk to you all tomorrow. Take care. Have a great day.